what I would think of like as a business owner with a business owner mind, it might not create a bunch of people to go out and spend and hire and do stuff. But I think what it's done is it's avoided what would have been Q4 layoffs, you know?
Exactly.
And so there's, some sunshine ahead. And so companies, see that and lower interest rates, lower cost of capital is going to help them ride out of.
Talk about instant reaction. The Fed 4 minutes ago hit us with a 50 basis point cut. Again, as I've said for the last several days, I had no idea what was coming, but I did promise you a 25 meant they were concerned, a 50 meant they were scared. And 4 minutes ago, folks, we learned that the Federal Reserve is scared. They gave us a 50 basis point cut. Matt, what say you? What's going on in the market right now?
Yeah, what's funny too. I've said it 1,000 times over the last 2 weeks. I feel like I'm tired of saying it, but like, this, I literally just had a client email me, the 50th client. Hey, they're cutting the rates today. So does that mean the 6.6 that we looked at for that condo is going to be, 6.125? Not how it works. But the good news for mortgage brokers is that it's the greatest marketing tool of all time, right? Because there's going to be stuff in the news all day about 50 basis point rate cut. Mortgage rates have seen this huge slide in the last few months. So we've gone from 7.5 to low sixes. We've already seen the cut, right? The cut in the mortgage market, which looks at future, is already baked in. But what's funny? Because it's baked in, people are going to be surprised and upset. Even at 50 basis points, Mike, rates are probably going to be flat. I looked at it. The 10-year treasury's up 3 basis points. Mortgage-backed securities are down 18 basis points today. Like, rates are worse today. And
again, this is important. I told people this was coming. I told them. I said, if the Fed gives us a quarter, rates are going up. And if they give us a half, it's going to be a big, flat, fat nothing burger. The 10-year note is up 2 basis points, at least on my phone right now, which means at the end of the day, mortgage rates might be up. And I think it's going to blow away the average person. Pretty crazy.
It'll be interesting to see too, because I haven't looked at it a lot today. I've been busy, with phone calls and client stuff on what's being said, what was part of, the Fed has their 50 basis point rate cut announced. They've probably got some notes out. 11:30 our time in California, Jerome Powell will speak, and that's honestly what will really be the market mover. I might go live on YouTube to look at what the market's doing from like 11:30 to 12 as Jerome Powell is speaking. Which, good place to insert this, Mike. I got a bone to pick with the One Rental at a Time audience. When you went over the other channels that the audience watches, Matt the Mortgage Guy was not there. So if you want a live reaction to Jerome Powell speaking and how that affects mortgage rates, go subscribe to Matt the Mortgage Guy. Come join me at 11:30. We'll do that. Even if you don't join today, subscribe to the channel. Like, real life information from a guy who's doing this all day, every day. 1,400 plus transactions that I've been a part of on the mortgage side. I know a thing or two only because I've seen a thing or two. And today's Fed day is no different. There's going to be a bunch of people that are confused. Headlines have to be dramatic to get clicks. And so people are going to be really excited.
Here's the instant reaction. Again, supersized cut. The market wanted it. The market, as of this morning, was pricing in a 66% chance of it coming. The stock market is up. Gold is up. Crypto is up. Bitcoin is up. Ethereum is down slightly. So again, one of the things that I have been most concerned about is we might get this crash up scenario where the Fed guy, the Fed guy, Joseph Wang talked about a year ago on my channel, the crash up. This, again, the other thing to point out, which we'll learn about at 11:30 and then the Q&A after, is rate cutting cycles are never one and done, even when they go large. So I'm going to be most curious about how many in 2024. We got 50 already. There are 2 meetings. Do we have another 50 coming? Do we have 75 coming? Do we have 100 coming? How much do we have by the summer of 2025? Could we see 200, 250? 300? Folks, this is wild. And again, I said if the Fed went 50, they're scared. What are they scared about? Is it jobs? Is it the banking system? Something that Anna Kelly and I talked about recently was the kind of kickoff of banking crisis 2.0 as people give up extended pretend. Jonathan talked about people starting to buy mortgage-backed security debt at discounts. The Fed could be signaling with this 50 rough seas ahead, or they could be saying, hey, we're trying to nail the soft landing. At this point, as I said in my daily financial news, I don't know which one it is, but now we know the Fed is scared. That's the only reason they go 50. The Fed is scared.
Yeah, and I think too, I saw something about, you know, new projections on inflation. A lot of us that look at those numbers, even somebody like me who's not like necessarily an expert, knows that there's plenty of stuff in there that's lagging. The weight of, you know, housing costs, like
Yeah.
you don't
Rent,
get
owner's equivalent rent, all of that. Yep.
yeah, you don't get a snapshot of what rents are today. Looking at today because of 12-month leases and whatnot. And so like housing costs, that inflation that's baked into their number is an old number. It's old data. And
Oh
so
yeah.
if you strip some of that stuff away, the Fed goes, well, you know what? Like this target of 2% that we, you know, based on this lagging data says we're only at 2.6 as of now. We might well be there.
Yeah. Well, let's play this out because again, we got the 50. That's now known. Earlier this morning, I'm trying to find my notes from this morning. I talked about things that I will be watching. Um, Number one is in your wheelhouse. And I think I know the answer, but since you're the expert, I will ask. You just got a 50-point rate cut. It's great marketing material. I'm sure there's already emails being blasted out everywhere around the country. The question is, will a 50 accelerate the refi boom?
Only because of marketing. It doesn't have to hit the rate sheet for more people to refi. And so it's all the more reason as a consumer to say, you know, beware of what you're being told. Because I talked to people on Monday and Tuesday. A lot of them, I said, this deal makes sense now. Let's lock. You know, there's no reason for us to wait because as of right now, the rate
Rates
sheet
are
today is
worse.
worse than it was yesterday.
Worse.
Mortgage interest
Worse.
rates are worse. And
That is so
so,
wild.
you know, it's probably, it's going to generate more conversations, but what I've been doing, Mike, and I think this is what more people should do, have the conversation, create a strike price and say, we're looking for 6.5 on investment property for less than half a point in cost. Like I talked to a guy today and I said, I just wanted to be clear. I said, all right, cool. If we can get this and it's available, you want me to lock and submit it? He goes, well, that's our strike price, right? I go, exactly. You know,
Exactly.
yeah,
Yep.
you're doing it exactly how I would. And so that's what you want to do. You don't want to have a flashy headline and then get on a call with a salesperson that just goes, you know, I can save you $284 a month and, you know, don't worry about the costs or anything else. Let's just get this rolling because that's unfortunately what's going to happen. I had a conversation yesterday with somebody, just a lot of refinances have happened. More refinances than should have happened
Absolutely. Only
because
going to get worse.
there's huge
Yeah.
call centers that want the volume and they're rejoicing in the streets right now because of this
Oh,
news because they know it's going to drive people to the phones.
the phone is ringing.
Right,
Exactly.
right. Have a
Exactly.
consultation call. Don't be sold.
Well, now here's the other bigger questions. Again, not necessarily in your wheelhouse, but you are in the lending space. The bigger question for me is what does this mean for the economy? Will this spark more small business lending? Will we see commercial banks step back in because they have drastically pulled back? Will we see more capital equipment expenditures? Because again, as rates fall, we are going to see the return required to make an investment fall as well. And then lastly, and maybe this is something we riff on as we close out this instant reaction is what happens to all that money, that $6 trillion sitting in money market accounts, in CDs? Now that the Fed has cut rates, you can guarantee by tomorrow morning, bank rates, saving rates will be cut as well. When does that money start flying off the sidelines and where does it go? What do you think?
Yeah, that's a good question because you're right. Like Fed funds rate directly tied to your savings rate.
Directly.
All these high
Right.
yield savings, 4.25, 3.75. It just,
Done.
it goes, right?
24
And
hours. Yep.
so, that's an interesting thing. And when it comes to the economy and jobs, like you said, not necessarily my wheelhouse, or I'm not an expert, but I think what I would think of, like, as a business owner with a business owner mind, it might not create a bunch of people to go out and spend and hire and do stuff. But I think what it's done is it's avoided what would have been Q4 layoffs,
Exactly.
and so there's, some sunshine ahead. And so companies, see that, and lower interest rates, lower cost of capital is going to help them ride out of, which, mortgage, real estate, other industries. We've been in a tunnel. We've been in a dark tunnel for 2.5
No.
years, right?
And again, your refi boom is happening. We got the mortgage data today, third week in a row, up triple digit year on year, up significantly week on week, which means it's building on itself. This news is only going to make refi go higher. Again, folks, please work with a professional. Stop working with these call centers. There's so many refis going on now. I suspect 15, 20, maybe 25% of refis just shouldn't happen. They're being sold versus being good for the provider. Matt, if somebody wanted to reach out and have a consultation, figure out what's what, maybe review one of these stupid quotes from a call center, how do they do that?
Just go to greatmortgagebroker.com. That's the best way to do it. Greatmortgagebroker.com. You fill out the form, where you're at, what you're looking to do. People have emailed me, matt@mtmg.com. If you're in California, you can email me directly. Emails just have a higher chance of getting lost, quite honestly. Is something that, like, you fill out the form, it entered into my system, and I've got it set
There's a
up where I'm going to
process.
make
Yeah.
sure I follow up with you. So, yeah, that's what people should be doing. It'll be interesting too to see. I have a feeling, because I've already started to see a little bit of it, renewed excitement in the purchase market. There's going to be, more people coming off the sidelines when it comes to buying. We want to hear a crazy stat, Mike, that Barry Habib shared with us last week. Highest since the Depression number of 25 to 35-year-olds living at home. I think the number was 19%. 1 in 5 25 to 35-year-olds living at home with their parents over these last couple of years. It's tough. It's tough for somebody who's young and whatnot. And so if we have better economic times ahead, cheaper lending, and you can get a 5.25 on a 30-year fixed next summer, some of those people might be moving out, along with everybody else who's in the housing market. So it'll be hopefully not too good of a time for sellers, but you still hold the gold, because inventory is a limited resource. And so it's going to be interesting. Personally, Mike, I've got a property listed for sale, and I look at funny data, like it'll show me how many people viewed it on Redfin or Zillow in that day. And today, for whatever reason, it was like 10x what it's been every other day prior. And so I'm like, oh,
marginal demand, baby. Marginal
right, yeah,
demand.
people like, maybe I can finance this fourplex at a little bit lower of a rate. I should take a look.
There you go. Yeah, folks, again, this is going to be very interesting. We now know the Fed is scared. They're not concerned. That is a big deal. We will learn more in the next 15 minutes when we get the dot plot, the Q&A. It is going to be a wild ride. But Matt, I want to thank you for doing this with me right after the announcement. Very cool. One more time, where can they find you?
Go to greatmortgagebroker.com, fill out the quick form. For one rental at a time, people, remember that the last Friday of the month, I'm live in school. So if you've got any questions about any of these scenarios, anything that you're being presented with from a refinance perspective, purchase perspective, somebody reached out to me today and they're like, $499 for no points from, I don't even know what the name of the lender online was. And I said, red flag. They can't offer that, right? And so
there's a story there.
I'm going to put it on the calendar. It'll be in school. We'll be talking live in there, which I always really enjoy. But yeah, anybody else who's looking for some advice, we're in 48 states. Greatmortgagebroker.com.
Folks, and also let's get Matt the Mortgage Guy in my top 15 list. Go to Matt the Mortgage Guy, click subscribe, show some support, some love. I'd appreciate it. Later.
Thanks.